Hi everyone. Hi everyone. It's clear. So let us start our live class now for today. So let me wait for 2 minutes for the students to join, then I'll start the class. Hi everyone. Can you hear my voice now? Is it clear? So is audio clear for everyone? Just give a message in the comment box, in the chat box, so that I'll start the class. So let me discuss first actually regarding house property as introduction, then we will go to solution. So here we are going to discuss income from house property. This is a topic in income tax, and all BCOM students have to learn this topic because they are going to get an examination, and we are going to discuss income from house property now. So every assessee may have 5 heads of income. One is income from salary, the other one is income from house property, and third one is income from capital gains, fourth one is income from business or profession, and fifth one is income from other sources. So these are the 5 heads of income one assessee may have. So here we are going to learn regarding income from house property. In the previous live classes also I discussed income from house property, and we did some problems, and I explained some solutions. So hope that was clear, and let us go and discuss next one. But before going into discussion, let me discuss the introduction part of the income from house property. So here income from house property means assessee may have house, own house. He may get income out of that. That is known as income from house property. And house property, income from house property can be divided into 2 types. One is let out house, and the second one is self-occupied house. Here I have shown on the screen, you can see that one is let out house and the other one is a self-occupied house. There are 2 house properties for the assessee. So here assessee may have own house, and that may be given on rental basis. We can call it as let out house. And self-occupied house means assessee may stay in his own house, then we can call it as self-occupied house. Okay, there are 2 house properties for every assessee, let out house and self-occupied house. We did problems under let out house in the previous live class, and now also we are going to discuss problems under let out house, but some extra information will be given in the question. We are going to deal with that, and we are going to calculate income from house property of the assessee. So let us go and discuss, but let us wait for 2 minutes for the members, for the students to join. So meanwhile, I'll show formats of income from house property. So this is actually format of income from house property, and already I said that in case of income from house properties, there are two types of house properties: let out house and self-occupied house. So first one is let out house. So in case of let out house, actually what kind of format we follow to calculate income from house property of the assessee? Let us see the format here. Here you can see that on the screen. First we should give of income from house property of Mr. Assessee name should be recorded there for the assessment year 2024 and 25. So next, under that we have to draw columns, particulars, amount. Next, first item always is gross annual value. The short form is gross annual value is GAV. So GAV should be calculated always. GAV will not be given in the question. We should calculate gross annual value always. And next, we have to deduct less municipal taxes. Okay, we have to deduct municipal taxes from gross annual value. So let us wait for few minutes, 5 minutes, because students did not join still. So let us wait for that. And here gross annual value. Gross annual value is GAV. Short form is GAV, and we are going to deduct municipal taxes from that. And gross annual value should be calculated always. Whenever we calculate gross annual value, we should follow 3 steps. So we should follow 3 steps for calculation of gross annual value. Okay, so we have to deduct the municipal taxes from that. Whenever we deduct municipal taxes, then we get net annual value. And from net annual value, we are going to give some deductions under section 24. So deductions under section 24 are 2. First one is standard deduction under section 24 subsection A, and the second one is a interest on loan under section 24B. So these are 2 deductions that we should allow always. Okay, and next we will get income from house property if we deduct these 2 deductions from net annual value. Okay, so this is a format that we follow for calculation of income from house property of let out house. Next, for calculation of GAV, we have to follow 3 steps. Step 1, step 2 and step 3. So these are very important because we should follow all the 3 steps. Then only at the end, in the 3rd step, we will get gross annual value. Okay, so let us discuss one question. Let us start, okay, let us start it. So here I will read the question. Hope everyone can see this. So you can see the question. On 2nd, on 2 dash 4 dash, on 2 dash 4 dash 2023. Okay, this is a date. On the date, so 2023 4 April 2023 means our previous year. So what is our previous year? 1st April 2023 to 31st March 2024. Okay, that is our previous year. So during previous year, Mr. Kiran, he is a assessee. Assessee name is Kiran. He purchased a residential house. So he actually purchased one house in Bidar city. So where he purchased in Bidar city. House is located in Bidar city. That is in India only. Okay. And for how many rupees? For 27 lakhs rupees. He purchased the house for 27 lakhs. Okay, purchasing price is 27 lakhs. Okay, and he took loan of 18 lakhs. He has taken one loan for purchasing the house, but total cost of the house is that is 27 lakhs. But he took the loan of 18 lakhs. Only 18 lakhs loan was taken from Karnataka Housing Corporation at the rate of 10%. Okay, so interest on loan is 10%, and they are asking compute the income from house property for the current assessment year. So they are asking us to calculate income from house property for the current assessment year. And here municipal valuation, municipality has fixed. So it has fixed the value at rupee 1 lakh. So here municipal valuation means it is nothing but municipal rental value, MRV. So MRV is 1 lakh. Okay, so they did not mention whether it is for 1 month or for 1 year. So we have to assume that it is for 1 year, because whenever they don't mention anything, is for full 1 year. Okay, so if they mention clearly that it is for 1 month, then we should multiply by 12. If they don't mention it, then we have to take it as for 1 year. So here municipal valuation is given for given the value is how much? 1 lakh. So 1 lakh is a municipal rental value. And fair rental value means FRV. So FRV is how much here? FRV is 1,05,000. So first let us discuss the question, then we will go and take all the details whatever we require from the question. Let us go and take all this. Okay. So next, what is here? Fair rental value is 1,05,000, and he has let out the house for residential purpose. So he has given the house on rental basis for residential purpose. During the previous year, the house was vacant for 2 months. So house was vacant for 2 months. Okay. So here house is vacant for 2 months. Whenever house is vacant for 2 months, that should be taken into account, and we should actually focus on this point whenever we calculate gross annual value. Okay, so here gross annual value, third step is very important. There we are going to take that. Okay, and next he paid the following expenses. So is audio clear, students? That should be taken into account, and we should actually I think this video is not visible properly. Anyhow, I will discuss with you if you want me to go with audio. Okay, so once you set up once video, you will see. If it won't come, then we will continue with audio only. So okay students, you see here, this is our question. So we took municipal rental value MRV and fair rental value is 1,05,000 and the house was let out for residential purpose. Okay, during the previous year what happened? During the previous year the house was vacant for 2 months. Okay, whenever house is vacant for any months, that should be actually focused while calculating gross annual value. Okay, in the third step. And he paid, the assessee is paying some expenses, but we are not bothered about all expenses. We are going to take only into consideration only two, that is municipal taxes as well as interest on loan. Okay, so here repairs are there. Repairs we don't take anywhere. Ground rent also we don't take anywhere. Municipal taxes 4,500. So municipal taxes we take into account while calculating gross annual value. So here municipal taxes are 4,500. But what is the point that we should remember here? Municipal taxes should be paid off. If it is due, then we don't deduct here from the gross annual value. Okay, if they don't mention anything in the question, we can assume that it is paid off and we can give deduction from gross annual value. Okay, so here they did not mention anything, so we can assume that it is paid. 4,500 is a municipal taxes. And next, collection charges. Collection charges are 40, but collection charges we don't give as deduction from anywhere. Okay, so we can ignore that. Next one is interest on loan. Interest on loan is very important for us because we are going to give it as deduction under section 24 subsection B. Okay, so what is the rule for interest on loan? Even it is paid or it is due, we will allow it as deduction. So here loan is due but not yet paid. Even it is not paid, we will give it as deduction. Interest on loan, we can allow it as deduction. Okay, even it is due. So it is allowed on due basis also as deduction under section 24 subsection B. So here we are going to take into account municipal taxes 4,500 and interest on loan amount, that is interest on loan amount also we are going to take, and because we are going to give it as a deduction. They did not mention amount here, but on the top you can see here on the top of the question in the first two lines they mention clearly house is purchased for 27 lakhs. Students, you can see here house is purchased for 27 lakhs and he took loan of 18 lakhs. Okay, total house price is 27 lakhs, but he did not take loan completely. He took only 18 lakhs worth of loan from the Karnataka Housing Corporation at the rate of 10% interest. You can see that also here. So interest rate is 10%. We should calculate that on 18 lakhs. Then we will get interest amount. That is known as interest on loan, and we can give it as deduction under section 24 subsection B. Hope this is clear for everyone. Let us go to our solution box and let us record all the details what we require for doing solution for income from house property for this solution. Okay, so let us go and record here. This is our solution box. First you have to start with a solution only. Okay, so here you should not draw columns directly. If you want to draw, you can, but first if you take the information from the question, then our solution becomes very easy. That is why we should take all the details here. Okay, so let us go and record here all this. So first let us write what is MRV. MRV amount, how much they have given, that let us see. If you see the question, MRV, where we have, here we have MRV. Okay, so here we have MRV, you can see here. Municipality has fixed the value at rupees 1 lakh. This is what? This is MRV. So MRV is 1 lakh. Let us go and record that. Okay, MRV is how much here? It is 1 lakh. Okay, fine. We recorded MRV. Then let us take what is FRV. FRV amount. How much they have given in the question. Let us check that. So FRV, how much FRV we have? You can see fair rental value is 1,05,000. So FRV is 1,05,000 and 1,05,000 is fair rental value. Rent of similar building means also is FRV. Okay, FRV is nothing but rent of a similar building. Sometimes they mention in any question that it is rent of a similar building. It is also known as fair rental value. Both are same. So it is how much? 1,05,000. If it is given as 1,05,000, then they did not mention anywhere here it is for 1 month or for 1 year. Then we can assume that it is for 1 year, because all MRV, FRV, ARV and SRV, these all we should take for 1 year only. Okay. So let us go and record FRV 1,05,000 here. 1,05,000. Okay, and next, what is the next one that they have given here? They did not mention SRV here. Okay, if you observe the question, nowhere SRV is available. Standard rental value is not there. Okay, so if SRV is not given, then we are not going to follow step 2 in calculation of gross annual value. You can check complete question. We don't have SRV. Standard rental value is not there. Okay. So fair rental value is given. Municipal rental value, here they mention municipal rental value 1 lakh. And next fair rental value is 1,05,000. Okay. So they did not mention standard rental value. Then we are not going to take that. If we don't have, we don't take. Whenever they give in any question, we are going to take that. So let us go and record other details. What else we require? That is municipal taxes. Municipal taxes we need to take into account, because we are going to give as deduction from gross annual value. So municipal taxes are 4,500. Okay, let us go and record municipal taxes 4,500. Municipal taxes is equal to 4,500. Okay, municipal taxes are given. And next, let us take how much interest on loan we have. So interest on loan is how much? They did not mention the amount, but they have given clues for calculating interest on loan. Okay, loan amount is 18 lakh students. You can observe. You can see in the question, 18 lakhs is a loan amount. They took loan from Karnataka Housing Corporation. So loan amount is 18 lakhs, and what is the interest on loan? That is 10%. Okay, interest on loan is 10%. So we should calculate 10% on 18 lakhs. Then we will get interest on loan amount. Let us record that. Interest on loan %, on how much? On 18 lakhs rupees, because what is the loan amount here? 18 lakhs. Okay, so if you calculate 10% on 18 lakhs, how you will calculate? 18 lakhs into 10 by 100. You can calculate in that way. So let me calculate that. 18 lakhs into 10 by 100. Then how much we will get? We will get 1,80,000. So 1,80,000 is a loan, interest on loan amount. Okay, so is equal to 1,80,000. This is our interest on deduction under section 24 subsection B, because interest on loan is allowed as deduction on due basis also. Okay, hope that is clear. And next, ARV, we need ARV, how much rent he is taking actually from the tenant, that is compulsory to take from the question. So at the end they have given actual rent received during the year is 1,80,000. So assessee is receiving actual rent from the tenant, how much? 1,80,000. Okay, so for during the year they said, so during that particular previous year he is receiving 1,80,000 as interest, as rent. Okay, actual rent that assessee is receiving from the tenant is 1,80,000 during that year. But again they said in the same question that house is vacant for how many months? 2 months. Okay, house is vacant for 2 months. So assessor received, owner received only 10 months rent. That is how much? 1,80,000, because every year we have 12 months. But assessee received only 1,80,000 rent. They did not mention whether it is for 10 months or 12 months. During the year they said. But in the same question they mentioned that house is vacant for 2 months. Okay, then how many months rent assessee received? Only 10 months rent during the previous year period. 1,80,000 is 10 months rent. Hope this is clear for everyone. Okay. So 1,80,000 is only 10 months rent that he collected from the assessee, because house is vacant for 2 months. Hope this is clear. Let us go and record that. Here ARV. ARV actually is how much? It is 1,80,000 given in the question, but that is for 10 months. We should take for 12 months. Okay, how to calculate? Let us see. 1,80,000 into, we need for 12 months. So into 12 you do, divided by 10. Okay. So how many months you require to calculate? You multiply that. Okay. So 18 lakhs into 12 you do, divided by 10. How much you will get now? You can see. You can calculate it. 18 lakhs into 12 by 10. So you will get 21,60,000. 21,60,000. Okay. So that is your ARV for 1 year. So 21,60,000 is per annum. Okay, for 1 year. That is ARV. So no, sorry, it is 10, we have to cut it, ma. Okay, it is not 18 lakhs, 1,80,000 students. 1,80,000 into 12 by 10. So we will get 2,16,000. Okay. So you can remove 10. That is not 18 lakhs. That is 1,80,000. You can see here. I was mistaken. So 1,80,000. That is the actual rent that he is receiving. Okay. For how many months? For 10 months. So 10 months rent is 1,80,000. So we calculated for 12 months. Okay. 1,80,000 into 12 by 10. So we are getting